But what's been happening in the market and what about the way forward? That's something that we'll discuss with Bhavin Shah. He's, of course, the founder at Sameeksha Capital, joining us on the show. Bhavin, hi, good afternoon. Good to be speaking with you. Let's start by the market setup itself, right? We don't have many cues per se lined up. Yes, there's an election and a budget, but large part of the street is saying that, that's pretty much factored in. You know which government is probably going to come to power. Budget is, of course, not expected to be big bang, and earnings is something which will continue in the same breath. What then you think will drive the markets to fresh highs, or do you think we'll meet the peak for the year?
Well, I think the fact that the economy is on a strong footing and growth momentum is pretty robust, and presuming that the current government comes back to power, they seem to have got the plans ready already in place to keep the momentum going. So that would support another year of reasonably good earnings growth, and that should be supportive of the market. That's what I would have to say.
The strong and resilient economic growth itself is enough to propel the stock markets higher. But if I had to ask you, Bhavin, within the large cap versus the mid cap kind of debate that the market participants have been having, which side of the debate are you tilting towards? Do you think this is going to be a year of large caps, or do you think there's always going to be a bigger beta when it comes to the small cap and mid caps?
I think the reason for a real decoupling of large cap versus small cap and mid cap could be when it happens. It could be that there is some fundamental there's a slowdown, say for example in earnings, or there have been a lot of companies without strong fundamentals that run up in the small cap index. Those would be the reasons why there will be a meaningful deviation between the performance of the two. Just because the small caps have rallied, I don't feel small and mid caps have done so well last year. I don't think it is sufficient condition for the difference in the performance going forward between the two. I think that if economy continues to be growing at such a strong pace, there will be also very good support for the small and mid cap stocks in terms of the companies as well. And I think that index can also find some reasons to rise further along with the large cap. So we're not really trying to differentiate significantly between the two. I think the opportunities to invest, at least for us, is in both spaces.
Okay, so not differentiating on the basis of market cap, and there's enough opportunity both in the mid cap and large cap space. But if I had to ask you about those opportunities, which are the top sectors or themes that you think will outperform this year?
Well, I think the focus of the sort of the investment-led growth, which is sort of a big part of the government's focus. So that probably continues. I think the investments in a range of sectors and incentives to create manufacturing capacity domestically, that continues. So there will be some opportunities because people will look at now more of a 5-year visibility. In terms of the plans for the new investments and new capacities being built. So that I think would be one area to look at. I think the chemical sector hasn't done well for a while. At some point maybe maybe it is sort of near the bottom, and at some point there could be a little bit of a recovery there from the low base. So that could be something to look at. I think we continue to find opportunities in the broad financial space. There is, within that, will be some selective, banks, NBFCs, as well as wealth management, life insurance. So across the board, we continue to find opportunity in that space. And then I think, it would really be across some of the digital consumption space that also, I think, will remain interesting for us.
Okay, point taken, Bhavin. On that note, we let you go. Appreciate you making time and speaking with us. So that's the word coming in. No dearth of opportunities. Yes, you'll have to work harder perhaps this year versus last year, but there's enough and more available in terms of the stock returns for the year.
If you like this video, then like, share and subscribe to ET Now.